With your spirit open and unconstricted, look at things from a high point of view. Miyamoto Musashi. That goes along with our special training for today to subscribers. If you're not a subscriber, go to chartingwealth.com and sign up for free. That's the only way you get our daily trainings. It is called Back Away to see what's really happening. We ask you to do that every Wednesday. That is where you go to your weekly chart. You forget about all the minutia and you just concentrate on what the weekly chart is telling you. Remember, it is our largest chart. It is the biggest trend, and all things being equal, the market tends to move in the direction of the largest chart. That's why the weekly vertical crossovers are so effective. That's what that training is about. If you're not getting those trainings on a daily basis, you're not getting our email that includes all of the great stuff we have to give you for free. The daily market worksheet, weekly market worksheet, trade worksheets, links to the texting service for free where we text you weekly vertical crossovers. When they happen, we send that out to everybody who signs up for that. It's only good for all of our friends in the U.S. I don't have a way to do that internationally yet. Also have things, the link to buy our book, to become a Patreon supporter, for the special trainings for that day, for, $25 off if you've subscribed to TC2000, which is the paid version of freestockcharts.com. It's what we use every day to chart the markets. It's the number one, I believe, charting platform on the planet. Nothing is better and easier. And very few have the price percent oscillator, which is what we use on a daily basis. It's what gives us our weekly vertical crossovers. Let's jump into these charts. A little mixed today. We see stocks, our two stock indexes, the S&P 500, the NASDAQ 100, are up for the day. We see that gold is also up, bonds down. So let's jump first into the S&P 500 on the weekly chart, up 0.35% for the day. Look at that candle. We had, that 2-day recross. What is that? Going on about 4 weeks ago. And it has been beautiful. Things have just been climbing, climbing, climbing. Look at that price percent oscillator heading up, derivative oscillator, bigger candle with a higher high, which is just what we want to see. 2-day chart, what do we see there? Well, of course, the prior 2-day candle ended on Friday. This candle has ended as of the close of the market on Tuesday, and we see the price percent oscillator edging away from the red signal line. Derivative oscillator, which had been losing energy, popped up for us. Big candle, one of the bigger candles we've seen in quite a while on the 2-day charts. Above that 2-day trend line, let's redraw that a little bit. Can we move it along and try to connect 3 candles? Close, pretty close. Prices, of course, well above the 2-day and the weekly. That's good to see. What do we see on the half-day chart? We see up movement in the morning, more up movement in the afternoon. We're going to reset that one too. You might ask, when do you reset your trend lines? You want them to be as close in time as is helpful. At the same time, you want to try to connect 3 candles or more. If you're only connecting 2 candles, which you can always do, doesn't necessarily mean all that much to you. The more candles you can connect, the stronger a trend line you have. So that's good to have. We also saw in the afternoon on Monday, we had that half-day chart crossover, derivative oscillator gaining upward momentum, price percent oscillator also heading up. We're going to go from the half-day chart on our S&P 500 to the NASDAQ 100. We're going to go to the weekly there. What do we see going on there? We see price moving up again, up 0.79%, about double of what was going on the S&P. Looking nice. Price percent oscillator heading up. Derivative oscillator gaining momentum. All good to see. Price moving up quite nicely. We go to the 2-day. Now remember, we had that 2-day recross back on Friday. And look at that big green up candle going quite well for you. Again, 2-day recrosses aren't my favorite. Weekly vertical crossovers are always the strongest. Almost always. Of the 13 we have had this year, 12 have worked quite nicely. But we see this 2-day recross working just like The 2-day recross worked very well on the S&P 500. Price percent oscillator heading up, derivative oscillator. Look at the half-day chart. What do we see there? Up in the morning, further up in the afternoon. Beautiful, my friends. We're going to go from the Qs to the TLT, which is 20-year bonds. What do we see going on there? Down for the day, 0.77%. We have a green closed box candle. What does that mean for us on the weekly chart? It means it's a slowdown in the down movement. So we'll continue to keep an eye on things there. We look at what's happening. Price percent oscillator is heading down, fairly, not super strong, but stronger than it had been. Derivative oscillator gaining momentum going down. 2-day chart, what do we see there? We also see the price percent oscillator, which had been flat, ticking down. Now, we look at the Heikin Ashi candlesticks. We have a red spinning top. And it's almost a doji, so that means lots of indecision tending down. Again, that price percent oscillator showing that derivative oscillators lost a little bit of downward momentum. Now again, we had that 2-day recross back on the 11th, went down for 4 days and really started popping up, and now it sort of looks like it's devolving a little bit. Price though is not within that 2-day trend line. It broke that back a few days ago. We go to the half-day chart. What do we see there? Down movement in the morning, a little bit of a slowdown in that down movement in the afternoon. We will feel better about that 2-day recross continuing if and when that half-day chart crosses over going down. So we'll continue to watch and plot that as it moves forward. Gold up just a little bit for the day, 0.12%. Now gold peaked back at the beginning of August, and since then it has been devolving in price. Price percent oscillator still positive, but heading down. Derivative oscillator losing momentum. Go to the 2-day chart. What do we see there? Well, it crossed over going down. And again, that would have pulled you out of a gold trade at least by then. And again, just sort of continues to move down. Lower low, we see, not a bigger candle, but a lower low hit. And we'll just continue to watch that derivative oscillator gaining momentum down. Price percent oscillator also going down. On the half-day chart, down in the morning, bit of a recovery in the afternoon. Price percent oscillators flattening. So again, what are we waiting for on gold? If there is a 2-day recross at some point going up, gold recovers, and that weekly is still heading up, we'll jump back in. Folks, that's where we are as we end the day. We have our, the 6th reprinting of our 2nd edition of Charting Your Way to Wealth is at the printers right now. We're getting it in on Friday. Get your orders in. If you haven't already ordered our book, you want to speed up your learning at what we do here at chartingwealth.com, then you need the 2nd edition of Charting Your Way to Wealth. We have an autographed copy for you. God bless, my friends. Follow the link in the show notes to buy that. Oh, and don't forget, Patreon supporters, we have people joining every day. Why? They want to get the 3-part Options Made Simple, the Charting Wealth Way. We have that available for all of our Patreon supporters. And don't forget, at the beginning of the month, we have our live question and answer call-in session for all of our Patreon supporters. If you're a Patreon member, go ahead and get your questions in. And the stocks and ETFs you want us to help you chart, so you can practice trade those effectively. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.